Hello students, today I would like to welcome you all to this video. In this video, we are going to learn about the irrecoverable debts. So let's start with the definition. So irrecoverable debts we called for the debt, or we can say is the amount that a business cannot recover from its customer. As we know, the trade receivables is the amount that we're supposed to receive from our customer, and if a customer is unable to pay us with some reason, maybe he become a bankrupt or some any other reason, so we transfer that debt, mean trade receivable, to irrecoverable category. So that irrecoverable means it will be your expense. So irrecoverable, the old name of this irrecoverable means bad debt. That's an old name of this irrecoverable debt. So irrecoverable, we try write down this one as an expense in our accounting. So that's the definition, that the amount that we will not be able to recover this. Why we do this? Because of there is a principle behind. The principle name is prudence. So we do that because the principle says that we are not supposed to increase our assets and profits. So the reduction in the assets, it's because of irrecoverable debts. So in the accounting, because it is an expense, so the double entry of this irrecoverable debts will be, so we will write down the irrecoverable debts account debit, and we'll credit the name of the person. Let's suppose the name of the person is Mr. Alex, so Mr. Alex account will goes to the credit. So this is the double entry of the irrecoverable debts. There is a scenario in which, let's suppose, we recover some amount of money and we are unable to recover some amount of money. So let me write down an entry for you. So let's suppose Mr. X has a customer Mr. Y who owed $500. So Mr. Y become bankrupt, so he is unable to pay the full amount. So Mr. Y paid only $200 in full settlement of his debt to Mr. X by check. Now in this scenario, Mr. X received only $200 in the settlement of the full amount of debt, and that was $500. So in this scenario, we received the partial amount of money. So the double entry will be bank debit from Mr. X point of view, obviously. So we are going to receive the amount of money by check. So that will be $200. And there will be irrecoverable debts because the rest of the money will not be able to receive. So the students can write down irrecoverable debts and bad debts as well. Bad debts is the old name of this irrecoverable debts. I usually refer to the students that if you have irrecoverable debt word used in the question, so use that word in your answer. So that will be a good impression, because now these days the examiner using irrecoverable debts in the question, so it's better to use irrecoverable debts in the answer as well. So irrecoverable debts means bad debts. It's also going to be our expense. How much amount of money that we are unable to recover, that is 500 less 200 means the $300. So the credit is the receivable account, means Mr. Y account. So that is going to be with the full amount, $500, 300 and $200. So that's another scenario of this irrecoverable debts recording. Now if we move on to the T accounts, so with the irrecoverable account, it's our expense account. So write down on the debit side of this account, let's suppose I'm going to make it here. So because it's irrecoverable account is going to be debited because of Mr. Y, so we'll write down Mr. Y here, and the amount will be the irrecoverable debt account amount, $300. So at the end of the year, so what do? We are going to balance this T account. So $300, $300. Now this $300 will goes to the income statement, because this is an our expense account and all the expenses accounts are ended up into the income statement. So if in the exam we asked to record the entry of year-end entry of irrecoverable account, mean the income statement entry, so that entry can be, let me write it down here, so that entry can be irrecoverable account credit and income statement account, income statement debit and irrecoverable account credit. So that will be with the 300 and 300. So this can be the entry at the year end. Now in some cases there is a question that can come up into the exam about the recovery of a debt that is already written as irrecoverable. So here we have a scenario in which we recover from Mr. Y, let's suppose, because we made this person bad debt in our previous entry. So we recover Mr. Y $300 by check. So this is the recovery of a bad debt. So in the scenario in the question they will tell you that this person was written as irrecoverable in the previous year or some months before. So what do we need to do? The double entry of this one is going to be like this: bank account debit, and this will be the irrecoverable debt recovery account, that will be credit. So the amount will goes like this: 300 and 300. So this account will make a new account that to record the irrecoverable debt recovery figure. So if there is any amount that is going to be recovered after recording a irrecoverable, so once we are going to make this T account, so the T account will be like this, for example. So it's irrecoverable debt recovery account. So it's going to be credited obviously, so we'll write down on a credit side the amount will come up here. So it is because of the bank account. This is it. So we are going to close this account at the year end, so we'll write down the total, we'll transfer the total, and we'll transfer this figure to the income statement. So the year end entry for this account will be the income statement account credit and irrecoverable debt recovery account debit, and income statement account or income statement credit, so with the amount of 300. So now this entry will be recorded at the year end. So as we know that irrecoverable is our expense, so this will goes to the in the income statement, it will goes to the in the expenses section, and irrecoverable debt recovery account is our income account, that's why it's going to be on a credit side. So it will be recorded in the income statement. In the income statement it will be recorded in other income section. So we know that after gross profit we write down this section other income. So in this section we'll write down irrecoverable debt recovery account. So this is how we present that the irrecoverables and irrecoverable debt recovery account. I hope that this video find you well. So if there is any question relating to this topic, you can ask in the comments, so we'll solve some question from this topic in the next video. Thank you very much.